Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently up 6.63% to 47,984. Ethereum up 7.39% to 3418. The market's doing quite well today. We can see Luna and AVAX, SHIB, Filecoin, Gala, Arweave, Bit, all standing out. When the market is green like this, people feel really good. If the market is green over a couple of days, retail investors get more and more confident. They get more and more certain. There's only one problem, and that's Rule 114. Markets penalize certainty. Now, what does this actually mean? When we look at liquidations for the past 24 hours, we saw 524.16 million in liquidations across 83,324 positions. Over the past 24 hours, around 75% of liquidations were short, and you can see that much more easily in this particular chart. What we actually see is a lot of people expected the market to turn down. And that was a very fair proposition. What did the market do? It actually pulled the rug on certainty. That's why we always have three position thinking. We understand what we will do if the market goes against us, goes for us, or goes nowhere. Crypto technical analysts have a specific methodology which they assess the market by. The most important thing is to understand where you're at in terms of the KS zone analysis cycle. Zone 1 is the panic zone, Zone 2 the blame zone. These are all about certainty, and it's all about just getting into the market for the first time. Maybe you don't know the rules if you're in these zones, and that is completely, perfectly fine. Every professional investor has been through these zones as well. Zone 1 and Zone 2 are the retail zones. Unfortunately, the rules here are of the loss of money. In Zone 3, we start to move into probability and rules, and also a lot of patience. Retail investors, those investors and traders, and we all know that every investor becomes a trader anytime they buy or sell, so it's good to know how to trade. In Zone 1 and Zone 2, people buy on green and sell on red. You can see that the percentages move against them. As price is coming up, a lot of retail investors and traders can get trapped at higher and higher prices, needing it to go far further to make back their money. Professional investors and traders are very different from retail. Professionals have that three-way decision making. They understand percentages. They make percentages work for them, not work against them. They have a lot of patience. They don't need to be in the market all the time. Sometimes it's best just to sit on the sidelines and wait, and that's almost impossible for retail investors because they're panicking. They don't want to lose out on anything. They want to buy the bottom and they want to sell the top. Professionals don't even care about bottoms and tops. The biggest thing separating professional smart money traders and investors from retail is that they actually buy on red and they sell on green. Many retail people would not even consider doing this. For example, looking at a market like this today, it looks really attractive, but only for Zone 1 and Zone 2. For Zone 3 and Zone 4, it looks like a sell opportunity. Zone 4 is the most important place to get to. That's where inner and outer peace reign, and that's all about a positive excellence life trend. You can see there are rules to lose money, to make money, and to keep money, but in making money, that's just not enough because you have to feel happy about your life. That's why Zone 4 is there. Rule 727 is there to get people out of Zone 1 and Zone 2 into Zone 3 and Zone 4. Don't care about missing out. There's a conceptual framework I like to share with people. It just explains how trading can actually trump investing. But the best thing to do is actually do both. You don't have to be a light switch. You don't have to do one or the other. You can do both. And in fact, combining the strengths of an investor and the nimbleness of a trader is absolutely what you want to do. What I have here is just a week period where we hypothetically turn 1,000 into 1,100, which is a 10% return. If we could do that compounding week on week, we would actually make 11,639% per year. Now, why do I talk about this? Do we want 11,600% return? No, we don't want that return. It'd be nice to get, but that's not the purpose of this example. What this is showing is that a lot of people in crypto think that they have to get 2, 3, 4, 5, 10x to be able to be considered worthy of selling. That absolutely is not the case. Understanding how percentages work can be a game changer. Now, what does it actually mean? If you got this 11,639%, and we're just being hypothetical, you would turn $1,000 into $117,390 in the span of a year. This is how compounding works. But it's not easy to do this. You must have the knowledge. You must have the rules. And believe me, you actually need patience. A lot of people say, oh, I have to do this every week. I have to always be in the market. No, you don't. When you understand the rules, you actually wait for the opportunities. Real wealth is very, very important. Who will you be when you have this money? Will you be a good person? Will you actually care for others? Will you be happy? These are things that a lot of people don't think about. They just think money will solve my problems. No, money will not solve your problems. Money is just simply the outcome of success. There's no question that money helps. It does, absolutely, and it's really important to have. As crypto technical analysts, we maintain a positive excellence life trend. We understand the importance of money, but we relegate it, we delegate it way down the list. Things like integrity, decency, kindness, gratitude and happiness, inner and outer peace, love, generosity, selflessness, persistence, commitment, courage, honor. These are the things that matter to us. Money follows. A lot of people, when they invest primarily, they say that's just not possible to make 10% per week. We do it all the time inside our community. Colleague Craig, I made a small 20% gain in 6 days. Well done, my friend. And the thing is that they don't have to be large. We're not greedy people. We're just about implementing the rules successfully. Bildy said, I took a 25% profit on some Gala and about 19% on Arweave today. This is from the comments from yesterday's video. Eliton asked the question, if you say 10% gain weekly, do you mean 10% on your total portfolio? That sounds great and almost impossible at the same time. We have an absolutely wonderful community. Everybody lifts everybody else up. That's because they maintain a positive life trend. Giving and generosity is part of what we do as a community. I'd like to focus in on the response that Tails gave. As technical crypto traders, we move in and out of positions all the time. Tails raises a really good point that we're always tracking the best opportunities. That's why we say opportunities reset daily. So Tails basically says, I would suggest not considering this as a portfolio. That implies a set structure of titles and 10% each week, which is not realistic in that case. This is very fair because we're moving in and out of different cryptos. Let's think of it as the amount of money we deploy into the market each week. We deploy it into assets, into cryptos, which we have researched and believe they can perform within a set window of time. We're not married to any project. 2 weeks ago, I traded Syscoin, and he did very well in Syscoin actually. And now it's all sold off, and I have fun with ADA and Gala, for instance. It's all in flux. Do you know what I mean? And Eliton came back and said, yeah, that makes sense. You might like to have a further look at episode 466. That was brought out on March 20th. That will give you some understanding of what these percentages actually mean. And there are some really, really good comments in the comments section as well. What we're actually saying, it's very much like the 10-5-10 rule. For example, if you buy something at $10, it goes down to $5, that's a 50% loss. But if it goes from 5 back to 10, that is a 100% gain. This is all about the ideology of making percentages work for you. Another important thing is that it's actually about scaling. To know that you can start off with a small amount of money and just build it up over time. That's really, really important to understand that as well. I think a critical point is to understand that you must have knowledge. In zones 1 and zones 2, people are basically throwing their money randomly all around the room, hoping that it will stick on something that gives them a very big return. Kind of like a venture capital firm, but VCs do a lot of analysis before they put 1 cent into something. A lot of people come into crypto and say, it all looks good, it's going to go up. But without the knowledge, without the rules and the patience, unfortunately, over time, you will lose. Crypto technical analysts scientifically track investor attention. They're looking where they can actually make that 10% return. And you can actually make much more than 10% return. But the key is that you have to understand all the rules. You need to mark up your charts properly. If you don't know how to mark up a chart, you will not make money, unfortunately. We need to look at outside trends. We need to check the stock markets, collect probabilities. We go inside the crypto market and find the market's focus, understanding that opportunities reset daily. We're always enhancing our pattern recognition. We have an focus on real wealth. So therefore, we're looking towards the longer term. We don't let money control us. We don't make money our master. It's just simply the outcome of successful application of rules. And then we patiently apply the 10-5-10 rule. Make volatility our best friend as we buy and sell, scaling in and scaling out of positions, never going all in and never going all out. There's also quite a conceptual difference between investing and trading. In investing, you tend to hodl. It can become like this: hodl, hodl, hold on for dear life, hold, 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 throughout the top, throughout the bottom, just keep on holding. But trading is very different. Trading is actually identifying something that others are missing. When Andre Cronje actually abandoned ship on crypto for the 3rd time, we saw Phantom sell down dramatically. These downward spikes really excite us as traders, but we always have to have patience. We were buying all the way down here, and when Phantom actually returned, we did incredibly well as a community. When we look at this from a trading perspective, from that bottom up to about the price now is a 43% increase. It's an amazing thing to understand that price can come down really hard, and even this little blip is very, very worthwhile. There's more than 10% in there. The other thing that traders do, they don't care about missing out. They don't care about getting every last little drop of return out of anything. They're in and out all the time, and so they just set a take profit target, and when they reach it, they're happy. And then even if the crypto goes up much more, they just say, well, that benefits someone else, that's nice. That's all about zone 4 behavior. In zone 1 and zone 2, especially zone 2, people, if they sell and the price keeps on going up, they get really, really stressed out. This is actually just what happens inside markets. There's no need for stress. Stress is a big killer. Please do whatever you can to get rid of stress. I created the Investator because I wanted to show people that they could bind the strengths of an investor and a trader to become something more than you would be individually if you just had one or the other. What happens is when people get into the crypto market, they define themselves as investors. And the reason is that a lot of particular influencers, for example on YouTube, they are investors. They are definitely not traders. So they're not quite sure when to advise you when to buy and when to sell anyway. What happens over time is that people get a whole lot of stress because they're hodling. They're pulled into the market with fear, uncertainty and doubt, and fear of missing out. When you look at the market right now, you may have FOMO. You may look at this market and say, oh, I'm missing out. I need to get in. I'm certain that it will go up. Oh, what's that certain word? Traders know that there is no certainty and it's actually punished. Potentially, what happens is when investors see the green, they find a sense of certainty, they buy it, and then all of a sudden what happens is it starts to turn red, and they say, oh, I messed up, I got in at the wrong time, and they seek to target someone in zone 2 to blame for that. And that's really fair. It's just people are starting off. They don't know the rules. If you don't know the rules of something, how can you win? A lot of influencers are retail by nature. They don't understand trading, so they themselves tend to go all in and all out, and they tend to buy at the bottom and sell at the top. And as investors, they will say, I'm just going to buy and I'm going to hold on for dear life. They're looking for that 1000% return. They want to minimize the tax. They are aware of trading. But when people understand that all investors become traders anytime they buy or sell, anytime you buy as an investor, you're actually a trader in that particular point of time. And we had a really good discussion about buying at market. There's a very big difference with buying at market and buying at limit. If you buy at limit, you can pick an order from the downside. You don't want to buy at the current price. When you go for market, you'll actually end up paying more than this sell level here. You will typically pay more than that, and that is just throwing money away. You always want to buy lower, and we can see that Bitcoin is now starting to come down. Because why is that? Price moves in a wave. It's rule 4. When people realize they can combine the best of being an investor and being a trader together, they use Borsog, buy on red, sell on green. They have volatility as their best friend. They understand percentages. They want to time the market. They want to get in before a crypto takes off. And that's what we specialize in as a community. They go independent of the news. Why is that? Because the news is all negative. It's all the end of the world is happening all the time, no matter what you're looking at. It's very depressing. And they use the CTKS method for marking up their charts. They don't have that stress that hodlers have. They have three-way decision making. They understand the 10-5-10 rule, down 50%, up 100% to get back to normal. They understand that 10% per week really adds up in excess of the returns that they could get if they just held on for dear life and had all those sleepless nights. With real wealth, we understand that tax is success and contribution. It's all about adding to roads and schools. It's a contribution back into life. Of course, we want to minimize tax, but we don't mind paying it because it means that we are being successful. And this is part of the positive excellence life trend concept. We're very, very different as crypto technical analysts. Something that you might like to consider is how the crypto that you're analyzing, actually what is the personality of that crypto. What I've done for you is to give you a bit of a box here, and this is formed from the CTKS method. The CTKS method is how you draw lines on a chart, and it replaces candlestick pattern analysis. It was a method that I invented myself after being in the markets for over 3 decades. It's a very, very good methodology, and we teach it inside the masterclass. What I would like to show you here is how you can look, for example, at support and resistance levels. When we look at this particular line, this is a very tight support line. And when we go up here, what are we actually noticing? We have a resistance line. Price has already passed that resistance line. So what we can say is what happened next. You're always after the what happened next. We can see that it came up above that resistance and then formed a higher low. This is a low, this is a low, but that's a higher one, and that's also higher. So we've got an uptrend here. We're seeing really positive movement, but we know price is always moving in a wave. It comes up and then comes down, comes up, down, up and down, up. Oh, that's interesting. As crypto technical analysts, we have a lot of rules, and rule 19, these are the rules of the game. Sharp angles reverse. So let's keep marking up this particular chart. When we look to the next level of resistance, that's looking good as well. We've passed many levels of resistance. This is fantastic. This looks like Bitcoin is going for it, but we know that sharp angles reverse. We're not getting carried away. This is the time where we use patience. For example, when price just took off like this, many people were getting really excited. But as crypto technical analysts, we know we can always buy lower. And that's rule 5. Literally, you can always buy lower. So what do we do with this particular chart? I've already marked up this area. This is a probable price zone up to around 55,980 and down to 38,579. A lot of people would say, Ken, what are you talking about? 38,579? This thing is going to the moon. It's got a rocket on it. It's Percy strapped to the rocket. It's going for broke. We always understand price is always moving in a wave. It always goes up and down. We're actually looking for this downward move to scale in. We really like the market. It's looking really positive, but that doesn't mean we waste money. We do not. It's kind of like if you went to the supermarket and you picked out some particular thing and maybe it cost $3. You go up to the cashier and you say, I want to pay you $4. You'd never do it in life, but we do it all the time inside markets. You might like to look at it as though we look into the market and say, I believe we're going to get a discount soon on our favorite item, our beloved alt. So we just wait. Now, where could that discount be? Let's go for those levels. We can see 44,229. There's a lot of resistance up here, but that becomes support. When the price is above, it can come back here and test. We can see another level of potential support at 41,635. Now, why are we looking at Bitcoin? Why don't we just go into a beloved alt and look at that? That has a very specific rule too. That's rule 45. No alt can escape Bitcoin's gravity. What does that actually mean? What's gravity mean inside the crypto market? When you look at this particular pattern that Bitcoin is exhibiting, it's going to be playing out across the alt space. We're going to get an over-exaggeration of the positive price movement. And when it comes down, we'll get an over-exaggeration of the negative price momentum as well. Please bear this in mind. It's really important to understand gravity, and we talk about that inside the masterclass. The last level of support is 39,084. Does that mean it can't go lower? Of course, it could definitely go lower, but it's not probable that it would go lower. Anything is possible, but probable is a little bit different. We can see we're up to an area of resistance through this area at 47. Well, basically at the price that we're at now, pretty much 47,650. And there's another resistance level at 50,406. So why have I drawn this guy all the way up to 55,980? Masterclass students will know This is where the CTKS method just excels. We're looking for potential air pockets. We're looking for where heavy resistance is and where it is not. And we can see that we've got fairly clean sailing. If we can go above these resistance levels, we could go up to 55,980. You know how incredibly volatile crypto is, so that's exactly why you must have your three-way decision-making process before you actually pull the trigger. Let's have a look at the fear and greed. The fear has come out of the market, and as crypto technical analysts, we buy when the fear is high. We love fear inside the market. It's the perfect time to get in, to scale in. And we don't try to pick the bottom because we're buying in levels of support. In that sense, there is no bottom. And what we see is that optimism is returning to the market. It's getting back up to this particular level. That's quite a long time ago. So could prices go higher? Absolutely they could. Could we get a potential wave down? We certainly hope so, and the probability does suggest that that is coming at some stage. When we look at aggregated open interest, we can see more and more people are getting more and more optimistic. This does push the price up. If I zoom in on Bitcoin at that 45-minute interval, you can see price is always moving in a wave. It came up, tried to test this resistance area, and then backed off, testing and backing off, getting above, backing off. It's always moving in a wave. There are waves within waves. And look at this, just shot up here and then shot back there. This is the thing that you always want to bear in mind. There are always waves inside the market, larger ones and smaller ones. As part of our process, we look across the main markets to give us an idea of perspective. The cryptocurrency market has been doing really, really well. It was about 1.8 trillion just a couple of days ago, and it's already above 2 trillion. Well done, crypto. And we understand globally the stock market and the bond market are absolutely huge when compared to crypto. Crypto is not going to decouple anytime soon. It could phase in and phase out, and it does that all the time. But understanding what crypto is, this is the internet of value, where you can actually own a piece of the internet protocols that are out there. That's what crypto is for. It's the internet of money. And we can see from its adoption cycle, it's so early. We are very early, and we've got literally decades to run on this. Masterclass students, you'll get this in TM6. We're looking at the fear gauge, the VIX inside the market. The VIX has come down to the support, did a little bit of a bounce, but has just collapsed below it. This is unsustainable. The VIX is very, very spiky. I used to love trading the VIX. Surprise, surprise. But the concept is when the VIX does this, the NASDAQ and all the other indices do this, they go up. When fear comes out of the market, prices go up. When fear comes into the market, prices come down. It's just exactly the same inside the crypto industry as well. When we see this magical, very, very powerful push off that bottom, that's fantastic, but price is always moving in a wave, and we can start to see from bond prices that we might be subjected to a little bit more of a downward pressure very shortly. We would be expected for price fear to come back into the market, and that's just because people would be booking profits. It's looking pretty good. When we look at geopolitical risk through gold, that is decreasing, but gold price is in a long-term uptrend. Please bear this in mind. The US dollar has increased, bond yields have increased as well, and oil has decreased. Quite a time ago, I said before this peak hit, I said be really, really careful. oil will probably come down. And this is kind of like what Bitcoin is doing at the moment. And longtime viewers know that I said that. And I said I would expect it to come down, but it's got very strong support through here. So we would expect on the probabilities to get a bounce in oil. Don't forget, we don't really mind about oil or anything in the main stock market. You need to understand the patterns. If you understand the patterns, you'll see these things apply over and over again in the crypto market. Remember how I was talking about resistance in Bitcoin? This here is resistance in oil, around the 115 mark. It hit around that mark and backed off. What do we expect from here? It would probably come back to around the 96 mark and then resume up. This is how financial markets work. When you understand these things, for example, Bitcoin is doing this at the moment. When you look at that, you say, wow, Bitcoin's going up and up and up. I know it's oil, but pretend it's Bitcoin. And then I say, oh, just be a little bit careful. It's coming into resistance. It's overextended, and whomp, it comes down 30%. You would say, ow, I didn't see that coming. But professionals do see it coming. We see it coming all the time. That's when things get overextended. We know that a retracement is on the way. Fear is overextended. Bond prices are overextended. Bond yields are overextended. We expect, and of course the Nasdaq, the indices are overextended. We expect a downward price momentum. And I can hear new people say, hey Ken, I'm not interested in the Nasdaq. I just want to study crypto. I don't care about the Nasdaq. And that's exactly how people feel when they get into the markets. But after decades, you think very, very differently because it's bitten you so many times. What I've done is I've just overlaid the Nasdaq. Look at that, the Nasdaq 100. What are these lines? They're the weekends. Because the stock market is so boring on the weekend. What do we see here? Look at this directional correlation. It's pretty spot on. We have to pay attention to the Nasdaq and look at this rally up in the Nasdaq and look at Bitcoin. It's very, very interesting, and we need to pay attention to it. The other thing that you would probably like to keep in mind, these are the number of margin shorts in Bitcoin, and this is the shorting of Bitcoin. Remember, we had over $600 million in liquidations, over 300 million in short liquidations. Look at that, it's just gone down a little bit. There are a lot of shorts stacking at the moment. Why do I say that? Why wouldn't the shorts go up if they're stacking? If you're seeing an enormous amount of liquidations and the shorts not going very far, it means those positions are being replenished. So even though there were a lot of short liquidations inside here, we're actually seeing that the shorts are getting fairly confident that the market will turn around, and I personally don't blame them. So very quickly we can see Bitcoin is coming into a level of resistance after a very strong move up. It's just a question of time when we get a pullback. Ethereum doing really, really well, outperforming Bitcoin, and we can see that by Bitcoin's differential gravity. Binance Coin doing very, very well, following Bitcoin's fingerprint. And when we see this gravity doing this, what do we expect if Bitcoin starts to come down? Please let me know in the comments. Let's have a look at XRP. XRP has been doing really well, and there's some very good reasons for that. Go XRP. ADA Cardano has done incredibly well, and we were buying in here in this low part because we want to get into cryptos before they turn around, and ADA has done very, very well. Solana, we were also in down near the bottom there, and this is all part of our focus of looking at the market, getting into the market before it does these big moves up, because we want to make sure that the percentages move in our direction. Solana doing well, but coming into a level of resistance. Luna is just butting up against a lot of resistance here, but it's got a very, very strong momentum. It could be very interesting to see what Luna does. AVAX, very similar coming into a level of resistance. Actually, if you look across the entire crypto market, in one way or another, pretty much all the alts are at levels of resistance. Rule 727 is a really important rule, and this is made easier with a knowledge of real wealth and a positive excellence life trend. Rule 727, don't care about missing out. If you're looking at the market and saying, oh, why didn't I hold on? Why didn't I sell at the top? You don't want to do that. What you want to do is layering out and just trading, taking a portion of your total funds and just using it for trading. It will make you a far better investor. And you can already see there's been a change in character in the market. Before it was quite green, now it's starting to go a little bit red. Why is that? Because Bitcoin is starting to come down, and that gravity is playing out across the entire crypto market. If you're going through a life pullback, please know our community's love and healing thoughts are with you. You're not alone. The sun will come out again, and there's always hope. And our community is just so magnificent. So many wonderful people. I appreciate you all. I hope you found the content useful. Please consider sharing, liking, and subscribing. Thank you very much to our moderators for keeping our community safe from scammers. And an extra special thank you to our ambassadors who are just amazing people. I appreciate you all so very much. And of course, a very big thank you to you for watching and for being part of our global KS family. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the tax software I use and the CryptoTradingKS Masterclass. Please check in the link of the description to get an ambassador discount, which is 80% off the Masterclass. If you just show more and come down to this particular level in the description, 80% off is just that link. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.